And welcome back. Even though mortgage rates are virtually unchanged compared to 2 months ago, our US housing market is still slowing down. I want to give you guys an update regarding home prices, housing inventory, home sales, price reductions, and of course, much more in today's video. And by the way, this is part 2 of my 2-part video series I make every single week for you guys based on the latest data from Redfin. If you missed my previous video, I talked about some early indications of home buying demand, but in today's video, I'm going to share a lot more what's going on with our housing market. So let's go ahead and dive right in. This is based on Redfin's most recent housing market update that they posted just before Thanksgiving last week. And this data in this report here covers the 4 weeks ended November 20th of this year. And Redfin's data goes back to 2015, by the way. Let's first talk about home prices because I actually have a lot to share regarding home prices in the US. According to Redfin here, the median home sold price was only $356,000, up 2.1% on a year-over-year basis. The median sold price, by the way, back in May and June of this year was very close to $400,000. Now it's only $356,000 and only up by 2.1% on a year-over-year basis, the smallest increase since the start of this pandemic. And also check this out because home prices have declined by 9% compared to May and June of this year. That's because the median sold price reached $392,000 back in the 4 weeks ended June 19th. That was the all-time record highs for home prices in the US. And because the median sold price in the US has now decreased to $356,000, home prices are down by 9% from the all-time record highs we saw back in May and June of this year. And also check this out because we're really close to getting to negative year-over-year price growth here. Have a look at this because on January 1st, the median sold price was $350,000. Now it's only $356,000. Therefore, home prices only have to decline by about $7,000 in order to get to negative price growth this year. Now, obviously, this is much different compared to May and June of this year because back then, home prices were up by 13% on a year-over-year basis. Also compared to the same time period in 2021 this time, home prices were also up by 13% versus only a 2% increase right now. One thing I do want to mention regarding home prices this year compared to last year is that around this time last year, home prices continue to increase. As you can see right here, in 2021, home prices increased more or less ever since October through the remainder of the year. What happened in 2021, though, that's not happening this year, is that average mortgage rates across the United States reached very close to all-time record lows in August of 2021. That caused an increase of home buying demand for the remainder of the year. Obviously, this year is much different because average rates are at 6.6% approximately, which is more or less double the number we had back on January 1st of this year. Therefore, I'm going to be following this very closely and of course reporting this to you guys because I would not be surprised at all to see negative price growth in the next coming weeks. And speaking of negative price growth, have a look at this. Among the 50 most populous US metros or US cities, home sold prices, again a lagging indicator, fell from 1 year ago in 5 markets. So home prices fell in 5 markets compared to 1 year ago in the US here. Prices declined by 9.5% on a year-over-year basis in San Francisco, down by 2.1% in Sacramento, and down by 1.7% in Detroit. Also, they fell by less than 1% in San Jose, California, as well as San Diego. It's also interesting to see that 4 of these 5 markets here are located here in California. Among the 50 most populous US metros, pending home sales fell the most from 1 year ago in Las Vegas. Look at that. Pendings down by 64% on a year-over-year basis in Las Vegas. Austin down by 58.2%. Phoenix, Arizona down by 57%. Jacksonville, Florida also down by 57%. And Sacramento, California down by 54% in the number of pending home sales compared to a year ago. Meanwhile, asking prices of newly listed houses only grew by 4.6% from 1 year ago, the slowest growth rate since the beginning of this pandemic. In regards to the average monthly mortgage payment of would-be homebuyers, that actually is at $2,384 per month. That's down 6% from 2 weeks ago. This is because rates went from about 7%, now they're approximately 6.6%. That's equal to $140 in monthly mortgage savings from 2 weeks ago for a typical home buyer. However, though, monthly mortgage payments are up 41% compared to a year ago because, of course, rates have doubled in the past 12 months. And here's a chart showing average monthly mortgage payments for would-be home buyers this year compared to years past, going back to 2020. And look at this. I mean, 2022 is a completely abnormal year regarding rates and also payments as well, because average monthly housing payments absolutely skyrocketed this year, up by 40.7% on a year-over-year basis here, far higher than the gains we saw back in 2021 as well as 2020. Because back in 2021, for example, average monthly mortgage payments were more or less flat from April all the way until December, which is much different this year because average monthly mortgage payments have been absolutely skyrocketing here. But as you can see right here, average monthly mortgage payments have been decreasing because rates were about 7.4% at the end of October. Now they're at 6.6%. Okay, let's change gears slightly and talk about pending home sales, new listings, as well as housing inventory, and of course, month supply as well. So according to Redfin here, take a look at this. Pending home sales were down a whopping 35.2% year over year, the largest decline since at least January 2015 as far as Redfin's data goes. So pending home sales down a whopping 35.2%. Meanwhile, new listings were down by 20% on a year-over-year basis, one of the largest declines since the beginning of this pandemic as well. So we're seeing this huge decrease of contracts being signed between buyers and sellers, but also home sellers are not listing their houses as much compared to 1 year ago, down by 20%. Additionally, active listings, which of course is housing supply, was up by 11.6%. The biggest annual increase since at least 2015. There's a couple of things I want to mention regarding these trends right here, because new listings down by 20% is very close to what Realtor.com is reporting, because for the week ended November 19th, new listings are down by 17% on a national level right here. Very, very close to what Redfin's reporting, down by 20% on a year-over-year basis. However, though, active listings, Redfin's reporting that active listings are up by only 11.6% on a year-over-year basis. However, though, Realtor.com is reporting for the week ended November 19th that active listings are up by 49% compared to the same week in 2021. And by the way, this agrees to AltosResearch.com as well, up by about 48% on a year-over-year basis. And here's some charts I want to share with you guys regarding pending home sales, new listings, as well as active listing inventory. So pendings again are down by 35.2%, well below 2021 and 2020, and have been more or less on this downward trend ever since May of this year. So pendings down big time, down by 35.2%. Meanwhile, new listings are down by 20.0%, well below 2020's levels as well. But despite this decrease of 20% on a year-over-year basis, active listing inventory has been increasing. So active listing inventory, or housing supply, is up by 11.6% on a year-over-year basis here. It's interesting to see that Redfin's reporting that inventory has basically been declining ever since August of this year, but still up by 11% or 12% from 2021. This is a little bit different than what AltosResearch.com is reporting. Look at this. Here's housing inventory on a national level right now. Inventory levels, according to them, have been more or less flat for the past couple of months here. Because back in, let's just call it August 1st. So August 5th, let's say, housing inventory has been more or less flat, because back on August 5th, there was approximately 543,000 houses for sale. And now there's approximately 563,000. So not a whole lot of movement regarding housing inventory over the past 4 months, according to Altos. Now, obviously, this is much different compared to the first half of this year, because more or less going back to March, let's just call it April, going back to April all the way until we hit more or less the beginning of August, inventory was increasing big time, but now it's actually kind of plateauing out. And going back to Redfin's report here, the month supply, which of course is a measure of the balance between supply and demand here, actually rose to 3.5 months. the highest levels since June of 2020. And here's a chart showing the month supply over time, going back to 2020. And look at this, because the month supply has been increasing big time ever since really June and July of this year. And at 3.5 months, this is well above levels back in 2020 as well as 2021. Because back in 2021, this time, the month supply was around 2 months. And now the month supply is around 3.5 months right now, which is more or less double the share back on January 1st of this year. Because going back to January 1st of this year, the month supply was around 1.7 to 1.8 months. So the month supply has more or less doubled since then. Also, check this out because it's taking longer for houses to sell compared to last year, but also compared to 2020. So days in the market is at 36 days right now, which is actually higher than 2020 as well as 2021. Days in the market at 36 days, compare that to last year, days in the market was 28 days. Also at 36 days right now, this is double the number back in May and June of this year. Because back in May and June of this year, this is more or less the all-time record lows for days in the market at around 17 days. So the days in the market has more or less doubled since then. Here's another interesting trend we're seeing right now because according to Redfin here, approximately 27% of houses that sold, a lagging indicator, sold above the seller's final list price. So about 27% of the time, houses selling over the seller's final list price. This means though, in contrast though, what this means is that approximately 73% sold at or below the seller's final asking price. What this means is that the vast majority of houses that are selling at or below the seller's asking price versus over the seller's asking price. One thing I do want to mention regarding this metric right here is this keyword right here, final list price. This is because this metric right here does not include price reductions. And speaking of price reductions, those have been skyrocketing this year. And have a look at this. This is according to Altos again. The share of price reductions for the 7-day average ended November 25th is at 43%. Far higher compared to last year at this time, because last year at this time, the share was about 27%. In 2020, it was 26%. In pre-COVID back in 2019, it was only 34%. So the share of price drops right now at about 43% is at least a 3-year high. Here's something you guys should definitely be aware of regarding price reductions though, because the share of price reductions has been increasing, but not nearly as fast as it once did this year. So right now the share is about 43%. Going back to the beginning of September, which is right here, the share of price reductions was only 40%. So from September 2nd through more or less the end of November, the share of price reductions has only increased by 3 percentage points. So let me share an example regarding this because for the week ended August 26th, the share of price reductions was only 39%. Now it's 43%. So in other words, over the past 3 months, the share of price reductions has only increased by 4 percentage points. Looking back to the previous 3 months though, have a look at this, because back on May 27th, the share of price reductions was only 23%. Then on August 26th again, the share of price drops was at 39%. Therefore, from the previous 3 months, the share of price reductions increased by 16 percentage points. Now it only increased by 4 percentage points over the last 3 months. So in other words, it's still increasing, but not as much as it once did earlier this year here. Let's also go back to Redfin's report here because they also talk about the average sale price to list price ratio, which is 98.5%. And by the way, someone commented on my channel recently regarding, is this based on the original asking price or the final list price? It's actually based on the final list price here. So it excludes, or this metric right here, excludes price reductions. So that ratio right now, based on the sale price to list price ratio, is at 98.5%, which more or less means that home sellers sold their houses for about 1.5% below their asking price on average. And this is obviously much different compared to 1 year ago when the ratio was about 100%, which means that houses were selling on average for the seller's asking price. Obviously much different compared to May of this year as well, because on average, houses were selling about 2% over the seller's asking price. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.